Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Thursday, the 21st of August. I'm Daniel Lam, your host for the podcast. We're approaching the end of the US earnings season, but it will be concluding with a bang, because the major semiconductor companies will be reporting over the next couple of weeks. Now, the major internet and technology companies that have already reported have raised CapEx guidance and will continue to invest significantly into AI infrastructure and capabilities. This is positive for the semiconductor industry and other companies involved in the AI infrastructure supply chain. In particular, as AI becomes more sophisticated, it will demand more customization in chips and also greater need for high-end chips in general. This will be favorable for the US semiconductor sector, which is the leader in the research and development space amongst global peers. Now, on the policy front, it is not as bad as investors were once fearing. Companies that invest or committing to investing in the US can be exempt from Trump's semiconductor tariffs. This means, by and large, the US companies are not going to be directly affected, although they can still be affected indirectly through end demand. However, we have been noticing some weaknesses lately in US semiconductor stock index as well as Nasdaq 100 in general. Well, technically, there has been diminishing upward strength as shown in the falling relative strength indicator, i.e. the RSI, while the index prices were making highs. Familiar listeners to the podcast would know that this is a classic sign for pullback in the indices. The favorable news that we spoke about earlier, for most part, would have been priced into the indices. Moreover, despite the US government's recently lifting export restrictions of downgraded chips to China, the Chinese government's response has been lukewarm as they are growing their local semiconductor chip capabilities. However, consolidation in US semiconductor stocks is likely to be limited. Positioning is key here. Compared to 12 months ago, the positioning in US semiconductor stocks, and also for US equities in general, is nowhere as crowded now versus then. This is going to limit the extent of the pullback. For Nasdaq 100, we see good support at 22,200, which is less than 5% below the current spot level. That is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details, visit Market Views on the Go on our website or click the link in the description.